That's great. Start off the recording with the cough. Okay, so we're gonna go over the Fibonacci scale. If you YouTube the golden ratio, you'll understand why things happen in the market the way they do. Cycles, price action, buyers and sellers. Okay, and it has to do with the 61.8% ratio. And this number occurs in everything: our wingspan, our DNA, the length of tree branches to a tree, like the snail shell, everything in this little circular sequence. Anyways, you'll know what I mean when you YouTube the golden ratio, And this is why the markets work the way they do. This is why the markets retrace to certain areas before bouncing off again, etc. What I want to talk about is not only the Fibonacci, but how do we find out where to plant it? Where do we go and everything like that? So first off, the market's going to do a bunch of things, right? How do I draw? First of all, how do I draw? I don't know. Hang on, brush. Can I brush with this thing? Oh, nice. Sweet. So here we go. The market's going to do different things. It's going to do something like this, and that is called consolidation. It's called consolidation, okay, where we've got a certain amount of resistance, okay, this would be considered all resistance, and then below it's all called support, until eventually particular people in the markets who are playing with a lot of money, okay, they collect liquidity going up, come back down, collect liquidity going down, and then who knows, either does something like this, or maybe it continues to go up to the upside. So then it's breaking out. It's breaking out of the consolidation, and that is called something is something called expansion. It's called expansion when it breaks out of this particular zone. With that being said, how do I delete all this? I don't know. I don't know how to delete all this. Hang on. Sheesh. Oh no. Doesn't matter. So this is consolidation, and then this is all expansion, okay, coming down. Now what happens usually is the market will trend, and the market's either going to trend down or it's going to trend up. So if it trends up, great. We're going to go to the upside, and then eventually there's going to be some kind of a pullback. And this has to do with a number of things. It might have to do with banks' institutional numbers, not banks' institutional numbers, but institutional numbers or numbers theory, whole numbers, okay, like 72,000,000, that would be a whole number. 7,000,000 would be like a major whole number, okay, right here. And this example is on BTC USD right now, and this is what we're going to be talking about a little bit. And the market's going to move in waves, and that's totally normal. So when it comes down, that is a retracement. This is a pullback in the market, right? Usually, sometimes we get a spike up, we get a pullback in the market, and that's where we want to find out where to take a buy position from. Okay, that is one confirmation, that is one thing that we could look for in terms of taking a position in the market to trade on the MT4, the MetaTrader 4. If we come down, then we spike up, right? We come down sometimes to this area again and then go up. And this does all of these patterns over and over and over again. And that's how it works. That's how the markets move. With this kind of retracement, it's going to come back to a particular area on the Fibonacci scale. That's what we'll be going over and looking at. When it comes up again, it's going to come back down to a specific level on the Fibonacci scale. You'll be able to identify these things on the Fibonacci scale, and then breaks out to the upside. And then who knows what happens after that? Maybe it'll break down, maybe we'll get a lower high and then come down again. Who knows? But one thing to take note in too is that in this particular pattern, first of all, it's called trending. You're trending in the markets now. And sometimes on this major pullback, it's going to come right back down to this high that was created over here. Funny enough. Okay, you can't really make that stuff up. Okay. But if I take a rectangular box, for example, to draw out certain things, I want to draw out highs and I want to draw out lows and talk about market structure. So market structure, guys, works like this. There's going to be highs and lows in the market. If we got a low, we want to identify that. If we got a high, we also want to identify that. We want to know if we're uptrending or if we're downtrending. Because if we're trending to the upside, chances are we want to look for buys. If we're trending to the downside, we want to look for sells. Okay. So how do we know if we're uptrending or up or downtrending? Well, check this out. If the market's made a low that's come out of expansion zone, out of here, for example, it's going to come up to a particular point and it's going to create some kind of a high. When it comes down and stops in a particular area, it's creating a low in the market. This low now is higher than this one. So if this low, if price stops at a particular area and then continues to the upside, boom, the market is now uptrending. In which case, this piece from here to here is a pullback to the downside, and we want to know exactly where to take a buy position in the market. And we do that from looking at the Fibonacci scale. I'll take a look at it in a second. When we blast back up, sheesh, we create a new high. This is a new high now in the market. And not only is it a new high, it's a new high, that's what it is. But how we know that is because price stopped here at this particular price level, and it's above this high. So we have a higher high. And I realized that was a lot of highs and lows just mentioned there. But this is really, really important to help identify as to whether we're in an uptrend or a downtrend. Is the previous high higher than the last one? Is this higher than here? And we want to make higher lows. If we made a higher low, perfect, we're looking for buys. We made a higher high, okay, confirmation that we're still in an uptrend. And this could technically work for binary options too. And if you're with us with the platform, this would be the same thing on the HFX platform, trading binary options. Same thing. If we're experiencing higher highs, chances are you're trending up, and the trend is your friend. So you're going to want to look for buys more than anything else, until you become a lot more advanced and get to know where price might reverse from, etc. For another call, for another time. When we get that pullback back down, we want to look and be able to identify where the next higher low is coming from. So we got the low, the high, a low, a higher low. Market moves up, we got a higher high. Market comes down, a higher low. If we have a higher low, confirmation for an uptrend, boom, and then we continue up, and it'll go up to a certain point, which we can also identify actually on the Fibonacci scale. And so we're going to be looking at a couple charts to be able to identify this same exact information. I wish I knew how to delete these things, but I don't. So wait. Oh my gosh. Yeah, I don't know. I don't know how to delete all of this. So, but I don't want all of this in the picture. The rest is fine. So check this out, guys. If we're looking at Bitcoin right now, for example, what do we say? The price is going to do a couple different things. It's going to consolidate. It's going to break out and go into an expansion mode of some sort. Or it's going to be uptrending to the upside or downtrending to the downside. Now, when it comes to, I just want to check this out for a second. When it comes to trading cryptocurrency, for example, we're going to look at a couple different spots. Actually, my bad. Let's look at the Fibonacci. Let's look at the Fibonacci for a second. Remember those highs and lows that we talked about? We talked about those highs and lows. Okay. Market's going to come up. It's going to come down to a particular area. It's going to come up. It's going to come back down to a particular area and go up. with the highs and lows, we want to identify where the next piece is going to be, right? How do we do that? We want to drag this particular tool. On tradingview.com, you can find it right here on the left-hand side. On this little button, it might be a pitchfork. It might be one of these funny little things here. But when you click on this button right here, there's a little arrow. You scroll down. Boom, we've got something called the it's called Fib Retracement. Boom. Fib Retracement, click on that baby, and you're going to drag it. You're going to drag it on the cursor from where the low is. If this is a low in the market, we want to drag the Fibonacci from the low to the high. Boom. We want to drag the scale from a low to a high. So now when we do that, what we want to identify is where the potential low is going to be. The Fibonacci allows us to identify where the pullback is going to go to. How do we know where price is going to stop? How do we know where price is going to go to, right? So if you're taking notes right now, this is what I would say. This is what I would say. And this isn't just from me. I'm not the super expert trader here. I've just learned a lot of information from the people who are making a lot of money in the markets. And I've had some success here and there as well. But I just wanted to clarify that this information is coming from people who are making a lot of money in the markets. People who are, real experts. All right. That's what I want to say right now. But when you are trading cryptocurrency, Bitcoin, Ethereum, Ripple, or XRP, okay, if we're trading those against the US dollar, for example, we want to look for specific zones, specific areas. One of them's the 38% area on the Fibonacci scale. One of them's the 50%, and one of them is the 61.8%. So in these next few examples, I'm actually just going to talk about cryptocurrency for the most part. But if you're trading Forex and you're trading the US dollar against the Canadian dollar, you're trading the Great British Pound against the US dollar or against the Japanese yen, right? Traditional Forex pairs, you're typically going to look at least the 61.8% for retracement, 70 and 78% for a potential retracement to look to take buys from. And that's just the basics, okay? You can get a little bit more in depth and look for specific candlesticks and look for the 88.6% level as well and get into some more advanced trading. If you do have any questions on that, definitely reach out to myself and we can help you learn, a little bit more advanced style trading for deeper pullbacks and potentially larger movements with less risk and that sort of thing. Not that this isn't less risk, what I'm about to go over, but just so you're aware. With cryptocurrency, we mostly want to look at the 38%, 50%, and 61.8%. What do I mean by that? Well, if this is the scale that I drag from the low to the high, I want to double click this thing. Boom. Double click this thing, and now you got the settings for the Fib retracement tools. And on here, I kind of got them in like funny different places because they could all just be like along here. But when you look at your settings on your chart, there's a couple things to look for. There's a couple things to look at. Number one, what boxes are checked off? We only want certain boxes checked off for the areas that we want to look at in terms of, the Fibonacci. Pardon me. So we want to check off the 0% for sure. We want to have the 38, okay, percent, 38.2, whichever, 38%. We want to make sure that those are clicked on. 61.8%, we want to make sure that's clicked on. And that's exactly how it looks. Make sure that your Fibonacci settings have 0, 0.382, 0.618. Okay, that's really, really important. And then 1. 1 is technically like 100. It's 100%. Okay. Anyways, and then you also want to have checked off 0.5%. And then do. That's the three main levels for trading cryptocurrency: 38, 50%, and the 61.8%. If you're trading traditional Forex pairs, like I said, then you're also going to technically want to have this 0.76. Oh no, how did I do that? Whoops. 0.76 okay, retracement number, key level. They're called key levels, all right? You can call them key levels. 0.86886, sorry. And then if you want, you have the extensions on there as well. Oh, 70% too. See, I said I got them in like different areas. I don't know why. You could technically just have them all in a row. But if you make sure you have it just like this, you can have it, you can change the colors if you want of the lines, okay, that show up. That's fine. You can play around with that, you know, make it pretty or whatever you want to do. You just want to make sure that specific levels are checked off. You want to have everything else unchecked. You don't want random stuff just checked off, you know, whatever, if you don't know what those numbers are doing, if you don't know what those things are identifying in the market. So to reiterate, regular Forex pairs, right? 0.705, 0.768, 0.886. Basically what I would do if you're watching the recording is take a picture of these settings. You take a picture of these settings, make sure that they you know, look identical to your Fibonacci retracement tool, and that would help you out a lot. And then the extensions, we'll take a look at the extensions. If I happen to notice it, if I happen to see the setup there, is identifying where price is going to go. So not only can we identify where price is going to retrace to on the pullback, right, to look for buy positions, right? Because if this is pulling back, but we know we're uptrending, we know we're going to go up, great. I want to know where to take a buy from. I want to know where to take a buy position from. And there's different things you can look at. You can look at, you know, moving averages, exponential moving averages, EMAs, right? The 50, you know, 100, 200, whichever one you might be looking at. You could also look at candlestick patterns. Maybe there's a candlestick formation or a pattern, you know, in previously that you want to identify, you want to look at. And that might be where price retraces to. Usually those things will line up with key Fibonacci retracements, levels. That's why we're talking about this. So like I said, 38, 50, and 61.8% for trading the crypto pairs. And then extensions. Not only can we identify where price is going to pull back to, but we can also identify where price is going to go. All right, so we might have a stop loss of 30, 50, 100 pips, whatever it is that you're doing for your specific trade. We want to know where we're going to take profit from, right? Where do we take profit from? Where do we go to the MetaTrader 4 and say, well, what price am I going to take profit at, right? How do we know what to do there? I'm going to move this over here. Well, check this out. Take profit number one would usually be the previous resistance. So if previous resistance was here, that's probably going to be my take profit number one. Previous resistance or previous support, depending if you're downtrending or uptrending, right? Where is price going to go? Where's your take profit going to be? That was supposed to be a snap. It's going to go towards the negative 16%. Number one, stop number two, negative 0.27%. And I'm going to be able to show a couple of examples that you can't make this stuff up. You cannot make this stuff up. This is just sometimes how, or usually how price goes, okay? So on here, like I said, you want to have those things on there. You want to have negative. So we got 0% to 100% with the retracement levels. And then these are called extensions, okay? Fibonacci retracement extensions, extension levels where price is going to go. Your take profits is negative 0.168 and negative 0.272, okay? And then those will show up there. If I take it off, it goes away. If I take it on, it's there. Maybe I don't want the 88.6 there right now because I'm going to be talking a little bit more about crypto right now. But like I said, for regular Forex pairs, I'm going to want to identify 88.6, 76, and the 70 levels. Right now, I'm going to take it away. Check out 86. I'm going to take that away. Check out 78. I'm going to take that away for now. Check out 70%. I'm going to take that away for now. And now it's a little bit cleaner. I'm looking a little bit less, and that's what I kind of want to look at. So that is a great explanation of the Fibonacci retracement tool and how to kind of read it. Now check this out. I'm going to provide a couple examples that you literally cannot You cannot make this stuff up, guys. Okay. So now this is the 4-hour time frame. So this is really big, obviously, and I got a lot of lines here, and it might be kind of hard to look at. I understand that. Okay. Don't worry. Don't worry. I'm actually going to delete this box. I'm going to delete this line. I'm going to delete this line, etc. Okay, cool. Now it looks a little bit less busy at least. And I'm going to show you why I had these purple lines here too. I'm going to delete those for now. Boom. Now it looks a little bit less busy, and I understand that this is a lot to look at, and it looks choppy, and you don't know what's going on and whatever else. If you're new, right? If you're new, that's okay. Don't worry. Don't worry. Okay. It just takes time seeing this over and over again. And if you haven't been studying personal development for a little while, whoops, Rampage appreciation, remind yourself to be grateful for what you have. That's the key to receiving. Anyway, side note, that was just a little side note there. If you haven't been doing personal development and listening to audios every single day, or reading a new book, 10 more pages every single day, I highly, highly recommend that. Why? Because it's really, really important. Repetition is key. Of positive thoughts, of positive energy. Not only that, but the information that you're learning. We want to see things over and over again. We want to be able to identify things over and over again. And that's how we're going to learn it. That's how we're going to stick it in our brain, keep it there so that we can see it again when we see it happen, right? So with that being said, check this out, guys. This is very simple for the most part. I'm going to look at Bitcoin on the bigger time frame right now, just to provide an example, okay? Okay. So right here, I'm looking around, the $38,000 area, all the way up to the $60,000 area. So check this out. I've got, looking for my rectangle thing here. I've got a low here, right? Low here. Market comes up. This is technically kind of like highs in here, technically, but it's not really the one I'm going to look at right now. But we do have a low here. We got a low that was created here. There we go. We got a low. We got a higher high. We've got a higher low. I was going to look at this low. That's why I was going to look at this high over here. But I'm mostly looking at this high over here because it's the most identical. Like, price stopped here and just like crashed right back down, right? That's why it's significant. That's why this particular high right here is significant, something that I want to look at. So we got a low here, way higher high, lower low. A higher low, sorry. Higher low. This low is higher than this one, right? Now I'm going to take the Fibonacci. I'm going to go here, go to Fibonacci retracement tool. I'm going to take it from this low. Actually, this one was kind of deeper. It's kind of a deeper retracement that happened here. Yeah, a little bit deeper. It did come to the 70% almost. Let me check this out. I'm going to turn on the 70% area. Okay. Sheesh. Wow. So when Bitcoin hit $60,000 almost and came right back down to about 43,000 almost, it did come down to the 70% area actually. Interesting. So I'm going to keep that on there for now. That was a deep pullback. So yeah. So that's what it's like, right? let me do that again. Whoops. I don't know what I just deleted there. I'm going to go to over here on the left-hand side of Trading View. I'm going to click on Fib Retracement. Boom, Fib Retracement. I'm going to drag the Fib from the low that was created over here. And the reason why I chose this spot too, guys, the reason why I chose this spot specifically is because it's pretty significant. It was choppy doing whatever it was in this specific area, came up, came down, and then we made like a large move, right? So this low that was created is like, it stands out, like it's significant there. So I'm dragging this Fibonacci from here, from this low, I'm dragging it up and placing the 0% to the high. Placing the 0% right here to the high. Boom, right there. So then we can identify, we look back, boom, the pullback happened all the way down to the 70%. Sheesh. That's where we would have wanted to take a buy position. What would that look like? Again, this is going to be a lot to look at and kind of maybe hard to identify and see. I understand that, I know. But the more you watch it over and over again and watch other sessions from Go Live and the free and the webinars that we have, you'll begin to understand. You'll be able to begin to see it. If we take a buy position, guys, it's called longing. You're longing the market. You want to buy and you want to watch the market go up and you're going to make money, right? So if I take a long position, that's what that means. It's buying. Click on the long. If I bought here, great. This is what it would have looked like. Maybe I would have had a stop loss, you know, below maybe this wick over here or whatever it might have been trading at the time. I'm not sure. I'm not going to point out number of pips or anything like that in this session, but that's how that would be. What did I say before up there when I was drawing a lot of information? This was the pullback. The previous high was actually over here. So this could have been your take profit if we were looking at this as a whole. Obviously, the only issue with this sort of thing right now, looking at it, is that we didn't know how long Bitcoin was going to go up for. We didn't know if Bitcoin was going to come back down to 20 or 30 grand at that time. I'm just providing a longer term scale, an example of how to utilize the Fibonacci scale and what it would look like. So now let's look at something a little bit more relevant to today's date of April 16th. It's April 16th of 2021. Check this out. I mean, we've been choppy, you know, for a little bit of time, going from 40 grand to 50 grand, going from 50 grand to 60 grand, back and forth here and there, doing flags, right? These are all flags and choppy areas. And then eventually we break out. Cool. Again, this is a low here. Okay. But I'm going to show you two different examples right now in Bitcoin. Check this out, guys. This was a low. I'm going to identify that low. It was kind of like an area of highs right here, but I'm mostly looking at this specific candle right here. What I'm actually going to do is plant a horizontal line right there because it looks pretty significant. I'm going to plant a horizontal line by clicking this button here, horizontal line. I'm going to place it on the top of the wick and these kind of candles here. You can see how we wicked up to here. You can see how we wicked here, right? So that, like these candles here, this wick here, this wick here, this wick right here, okay? If I get a little bit more in depth, wicked, wicked, wicked. That means that price is attracted to that area. The market price is attracted to that specific price, or the market story is attracted to that specific price for some reason. Oh, I know why. It's $60,000. It's a whole number. That makes sense, right? So price was having trouble going past $60,000 again so many times. Even here, again, until it crashed down, came back up. Anyway, low here, highs were created here. Then what happened? Market pulled back. How did we know where the market was going to pull back into? And again, this works on any chart, on any time frame. And yes, I understand, you know, in terms of Bitcoin, we don't know if it's going to go to 100 grand. We don't know if it's going to go to 70 grand tomorrow. We don't know where it's going to go, right? But if we were believers in Bitcoin and you know, or maybe we were just trading the pound against the Japanese yen, or we were trading gold, or we were trading, you know, Ripple, and we were like below the highs, previous highs and stuff like that, and we kind of knew where price might head to, we have an idea, then this is what we would look at, right? We got a low, high, we created a new low. Where did the low go to? Right? Where could we have thought that the next low might have been if we were going to continue on an uptrend, if we were going to continue in an upward direction in the market? Well, I'm going to take the Fibonacci, click on this button, click on the Fib Retracement, click on that baby, and I'm going to drag it. I'm going to drag it from the low right here I'm doing it way over here because we want to cover all this area, right? We want to cover this area. So I'm dragging it from here, but I'm making sure my cursor is at this low, dragging it up, clicking at the top of this wick or candlestick, whichever you want to do, tapping, boom, Fibonacci's there. So where did it come down to? It literally, it was so close to tapping the 50% area. But what did I say, right? I said usually we're going to look at the 38 and the 50% areas, and sometimes 61%, 61.8% for the most part, right? It's not always going to be textbook trades. It's not always going to be, incredibly identifiable, but you can't make that up. We got the 38% there, the 50%. It literally came to that zone and came back up. Yes, we can identify a specific price like 60,000, for example, and we could have sold here, we could have sold here, we could have sold here and made money. But at the end of the day, we're usually looking at a specific zone to trade from. Price isn't usually, always black and white. Usually it's a zone, usually it's a gray area. And this would be the gray area, 38 and the 50%. I'm going to delete the Fibonacci now and look at where it came up to. Oh, wait, let me identify that actually here quick. I'm going to drag it from the low again to the high. Guys, check this out. You can't make this up. Not only did we get a buy position in the 50% almost area, where did it go to? Where would have our take profit would have been? Take profit number one probably would have been the previous high. Sheesh. Previous high right there. Oh my gosh, at 60 grand. That makes sense, right? Price is attracted out of the market. The market is attracted to $60,000. We're going to see it again in a second. Check this out. So we came up. Where did price go? It came to the Fibonacci extensions. Negative 16%, negative 27%. Those are the Fibonacci retracements. So not only do we identify where to take a trade from, where a possible buy might be, right? On the pullback, we get the pullback down, sheesh, pull back to the specific zone. Where's the market going to bounce to? It's going to go to the Fibonacci extension zones. Which one? We don't always know. We don't always know which one it's going to go to. But if we're bullish and the market's going to go up, it's usually going to go right to the 27%. Where it goes from there, we don't know. We want to take our money and run. We want to close our positions and take our money. I mean, we could talk about that too on this session maybe, but I'm not sure how long it's been, to be honest. But now check this out. That was the Fibonacci extensions, right? We went right to those levels. Now what happened? Not only did we create a new high, right? When we passed the Fibonacci level extensions, we created a new high, but the market retraced. What should we have been looking for? Right when we made this high, right when we made this high and we started getting a rejection here and this big black candle came down, right away, we could have taken the Fibonacci from this low and dragged it to this high. Look at that. Look at that. You can't make this up, right? You can't make this up. Again, I dragged the Fibonacci from this low to the new high that was created. As soon as we got a high created, and we know that by possibly rejection, meaning price coming back down, a bearish candlestick like it is here, or something. You can plan for where the pullback might come down to. Look, the first time it went to the 38%. The first time it went to the 38% zone right here, right there. It tapped there. In which case, if you were looking at the markets and you were analyzing stuff, you could have technically taken a buy right off to the 38%. Stop loss below here a little bit. Manage your risk properly. Boom, where would take profit would have been, Oh, we've been looking for buys here, right? But I don't want to get too complicated here. But let's just pretend we bought off the 38% line, right? Where would take profit have been? Here's two questions to ask ourselves. Do we think Bitcoin's going to keep going up? If we do, our take profit could have been previous resistance, It could have been the Fibonacci retracement tool, extension, sorry, whatever. But also, we could have dragged the Fibonacci from the newfound high to this low right here. Okay. Now, I don't want to get too confused or anything like that, but when we were dragging the Fibonacci from the low to the high, we were looking for retracements down, right? Because we're uptrending. We're uptrending, so we're looking for pullbacks down. Now, don't get too confused. Don't get too confused here. But look, if we're making, not only do we make major highs and lows, not only do we make major highs and lows, we make little highs and lows along the way. We make little highs and lows along the way. We got a low here, a high here, a low here, a high, almost kind of a high here, and then low, and then, I don't know, consolidated. But then we made a high. And then technically 38% happened. We made a low. Kind of. We made a little bit of a low, a smaller low, right? Now, if we took a buy off the 38% level, right? We identified that. If we took the buy off of this 38% level, where is price going to go to? Possibly, I would say previous resistance. I would want to take profit at previous resistance. But another level that we could expect is son of a gun, and I'm super excited that I'm identifying this right now. Even for myself, right? Always a student, always humble, always a student. I'm seeing this again for myself. We could have taken profit at the 61 or the 70% even, but it's mostly the 50 and 61%. So let me do that again. Now, if the market's dropping, we're looking for a pullback up. We're looking for the pullback up. Long term, from 56K to 72K to $70,000, wherever Bitcoin is going to go, technically we'd want to look for the next higher low and then look for the next bounce and then look for the next higher high. That's technically what we'd want to look for. But in this instance, I'm dragging the Fibonacci from the high. Now I'm going to drag it from the high and I'm going to drag it to the low. The smaller low, right? The smaller low. And where did it go to? It went to the 61.8%. Sheesh. So let me do that again for another time, because I know we need repetition, right? I'm going to drag the Fibonacci from the bigger, higher low to the high that was created. This is what we were originally looking for. And it bounced right off the 38%. So we technically could have taken a buy position there. So what do? Let's take the long position. I'm over here on the trading view on the left-hand side. I'm getting the long position out because I want to take a buy. Boom. Buy on the long position off the 38%. Stop loss to wherever you want to manage your risks to, right? Where would I take profit to? Well, I mean, maybe I want to take profit at 70 grand. I want to take profit at 70 grand. I don't know. But we can also identify this by securing profits. We want to be able to secure and maximize as much profit as possible. So who knows if we're going to go to 70 grand or not right now? We don't know that. But we could have dragged the Fibonacci the opposite way, from the high that was created to the low. And like I said, where did it go to? 61.8%. And that's where we would have taken profit. Maybe. Right? That would have been like take profit number one. Because we don't know how high Bitcoin, we don't know where this is going to go next. This could go to zero for all we know. Hopefully not. Knock on wood, it's not going to go to zero. It's going to go to 100 grand soon, right? But that would have been take profit number one, the Fibonacci retracement level right there. Okay. So that's just an example. But not only did it bounce off the 38%, it also, if we did it again, we're dragging this again, it bounced off the 38%, went up a little bit, and then came right back down. I'm going to drag the Fibonacci from this low to this high again. Holy shoot. It came up, and then it came right back down. Where did it go down to? 50%. You can't make this stuff up, right? So these are levels where price is going to trade back and forth to sometimes. Sometimes 38, boom, come down, bounce right off the 50%. Oh my gosh. Now, where are we going to go? I mean, who knows? We can do one or two things. We can drag the Fibonacci from this smaller high that was created, a little bit smaller high, to the smaller low, right? Because this happens on all time frames, right? Any candlestick patterns, Fibonacci indicators, whatever it is on the time, it doesn't matter. The algorithms are going to be the same. The patterns are going to be the same, and history repeats itself, and it just goes over and over and over again. The difference between a profitable trader and somebody who's not is somebody who's, one, managing their money well, two, sticking to a trading plan, managing their risk, which is kind of managing their money, but sticking to your trading plan and identifying this same information over and over and over and over again. So like I said, I'm actually going to plant a line here at the 61.8%. Super, super curious. I want to, change the color of that, maybe to pink or whatever. Pink, I don't know, whatever. Pink, yellow, blue. What would be cool there? I don't know. Whatever, I'll just leave it at pink, whatever. So there we go. Because we don't know. Like this is technically a flag right now. So right here, for example, this is called a flag. Okay, we're still in an uptrend. We're still making higher highs. We're still making higher lows. So we're technically still trending to the upside on the longer time frame, on the bigger scale of things. So hold on. What was my point? Oh yeah. So these were smaller highs and lows on a smaller time frame. This was actually technically a smaller little downtrend, right? Technically. And this was a flag. Then boom, we boosted up, did our thing, fit from the low to the high. We got 38%, 60%, 50%. Bounce, 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 bounce. So my point there was the same thing could be happening here. We could be forming another little flag right here. And what I mean by flag is not really, the major players aren't really buying a lot. Major players, banks, institutions, hedge funds, whatever, they're not really doing a whole lot right now. They're just kind of sitting on their hands, waiting for whatever, waiting for the world to change, waiting for the moon to change color. I don't know. I don't care. The market's just going to do this thing, right? And it's usually kind of, what's it called? Parallel. Usually they're kind of parallel, so you can identify the small little trend that it's making, forming the flag. So my guess is this. My guess right now, this is April 16th. One or two things are going to happen. I don't know what color I made my arrows here. One or two things are going to happen from here. We're going to go to this price, right? This was like the 61.8% level. We're going to go to here. And we're going to come down from there. Okay, this trend line / the level that was created, and then maybe come down to this support. Maybe come down to this support area before going to the upside. Or this is done flagging and somebody's going to come in and just buy a whole bunch of Bitcoin because that's the thing to do right now. And this is just going to blast off from here. We don't know. We don't know what's going to happen. Because check this out. Check this out. You can't make this stuff up. Remember, we bounced off the 38%. We bounced off of the 50%. There's still opportunity to bounce off the 61.8%. And where would that go to? Can't make this stuff up, guys. You cannot make that stuff up. It literally, it technically, if it's following this pattern, right, it's going to retrace back down to this key level of 61.8%. I actually want to take a picture of that right now. Who knows? Who knows what's going to happen? And if you're watching this, what I'm doing is I'm just going to put this in our private group chat right here. Private Telegram right here, where we analyze stuff and go over some information. Little bit of Bitcoin analysis. Need to listen to Nick and Picasso, but doing a small training here, thought I'd share. Anyway, so I'm really interested to see what's going to happen here. It's going to be interesting. So that's Bitcoin. That's some examples of the Fibonacci scale. Now, what I really want to look at too is Ethereum. Before I stop this recording, I want to look at Ethereum because, man, I killed this. If I was just investing my money during this time, during this whole bull run so far. I've been investing my money and I've been making my money that way, which is great. I'm incredibly thankful and it's amazing. But if I was trading on the MetaTrader 4, I would have been killing it. I should have been trading. But anyways, check this out, guys. So I was identifying this same exact information on Ethereum. Ethereum was technically doing the same thing during that time. So check this out, guys. Now this is a little bit different. Ethereum's been doing wedge patterns. It's been doing triangles. It's been doing consolidations. It's been doing head and shoulders. It's been doing everything literally in the books. And that's why so many people are probably confused as to whether we're going to see a big retracement to buy more at a lower price or whether this thing's just going to keep going up. And as we see, it's just going to keep going up for a little bit longer. So thankfully, here we go. Anyway, check this out, right? This is, I mean, there's a lot going on, obviously, and stuff like that, but you can't make too much up. You can't make too much of this stuff up. The Fibonacci and the algorithms and price action happens on all time frames. You got a low here, a high here. Great. Fibonacci, low to the high. Where did it spike down to? Can't make this up. First, a little bit of a spike off of the 38%, 50%, but it wicked. Guys, it wicked very, very smoothly and quickly to the, again, snap, oh snap, to the 61.8% before taking off to the upside again. Straight to the 27% on the Fibonacci levels, on the extension levels. So that would have been the smaller time frame, right? You could have been looking at that on maybe the 15-minute, the 1 hour time frame and identifying that kind of a setup. Okay. Larger time frame. This is the 4 hour, right? 4 hour, check this out. Fibonacci again. I'm taking the Fibonacci from the low, dragging it to the high, right? I'm dragging it to this. This is the biggest, like, significant low on the 4 hour time frame. We've got stuff in here, but this is where price really came down to from a higher price and really took off from. So that's what makes this low really, really quite significant. So I'm dragging the Fibonacci from this low, dragging it to this high. Boom. Where did it come down to? 38%. It did some choppiness, but it blasted. It just tanked right down to the 61.8% level, Fibonacci level. Not only that, it hit this trend line. It hit the trend line that I created from all the way, check this out, guys, all the way from 550 bucks Ethereum US USD, from this low, this significant low here, to this low that was created at, wow, $1,300. Came up, did its thing, whatever. Where did it come down to? Bounced right off the trend line in line with the Fibonacci scale and took off. Now, having said all that, there's different things to look at, right? This is everything that I've been talking about so far has to do with price action, some resistance support stuff, but mostly pullbacks, retracement zones. Where's price going to go to, right? That's everything that we can look for. And this is called technical analysis. This is how we can identify exactly where price might go to based off of technical analysis alone. Okay, technical analysis alone. And I pointed out a fair amount of examples. You can't really make this stuff up. You can't, right? It's just how it works. Like I said, the 61.8%, it shows up in everything in life. Watch the YouTube video on the golden ratio. It'll explain it all. Not only did we get the buy set up at 61.8%, oh my gosh, where did it go to? It's negative 16, negative 27%, and then dip down. Now, in terms of price action, highs, lows, resistance, and support, where did it go down to? Well, first it came down to this kind of a little bit of a bunch here, almost to this area, but not quite. It didn't quite come back to this newfound support. So we came up, and then we came down. This is why we crashed down. Boom. We wicked right into this area of the previous resistance. Okay. Not only did we come up and make that full try not to swear, that full move, but we also came back down to do a huge, huge retest to this newfound resistance in the market. So now, right, 1900, 1950 area, 2000, this whole significant area is now a newfound support. It's a newfound support. Now, check this out. Let's see what's happening right now. We came all the way up. We made a low here. Actually, let me do this first. Let me go back a second because I think this bounced off of the 38%. Right? So we got the 61.8% here. Oh, let me delete this one first. All right, we had the 61.8% here on the bigger time frame. This one that I'm about to show you probably could have been identified on the 1 hour, but mostly 4 hour. I mostly look at the 4 hour time frames, to be honest, for investing purposes, for candlestick patterns, stuff like that. If I drag the Fibonacci from this low to this high, where would the first tap would have been? It came pretty darn close, right to the 38%, and then just took off. There's clearly lots of buyers in this area ready to buy Ethereum, and that's why price just took off right there. Extremely, extremely bullish. So boom, trend line here. I drew this trend line a little bit ago because I was waiting for this trend line resistance to surpass it. Okay. So when this pattern started to form, I was kind of like, oh no, do we make a lower high here? Should we be concerned that Ethereum is going to go back down? I was like, no. Ethereum is too bullish. We're going on up. We blasted to the upside, and that's what happened. And what I did was I dragged this line from, I don't know where I dragged it from. Let me try this one to here. You could also do, I don't know. That would be the most significant one. But basically, when you draw a trend line, guys, you want to get as many touches as possible. So this one had 1, 2 touches, right? But it was like the higher kind of resistance. But this one had 1, 2, 3 touches here. Almost 4. 1, 2, 3-ish, kind of almost 4 touches. But they cross together in this particular area anyways, and now it's pretty straightforward that we're going to continue the upside. Where did we get down to, right? When this started to fall, I bet a lot of people tried to sell, and they were wondering where price was going to go. Well, not to worry. We're going to take our Fibonacci. Oh my gosh, I can't believe I'm doing all this. This is crazy. Fibonacci from the significant low that was made, dragging it to the high, and it tapped right off of the 38%. Can't make that stuff up. Can't make that stuff up. Now, before I end the recording, before I finish this kind of training, before I end the recording, I definitely want to look at XRP really quick. Because, oh my gosh, because it's talked about a lot and that sort of thing. But check this out. So there's kind of a couple different significant lows and highs. I'd say there's for sure a low here. A high was created here. A low was created here. And then we just blasted right up, right? But what happened here? We have this low from here, traded to this high. Boom, crashed right down to the 38%. Maybe you would have taken a trade there, a buy setup there, and you'd want your stop loss probably below the 50%. That's the only thing, is that then your stop loss is like 1,000 pips. So that's the only thing about taking that kind of a trade, is you want to be wary as to how many pips your stop loss is going to be. So I'm identifying things on the 4 hour, but you know, stick to the 1 hour and the 4 hour to analyze and identify these things, and take your trade accordingly to your trading plan, proper risk management, etc. So with that being said, that's another example. 38%, continue up, Fibonacci level extensions, blasted right up. Here's something to note too. See these Fibonacci extensions, not only did we get there for take profit points, you know, first previous resistance, obviously, previous resistance, take profit number 1, but also the Fibonacci extensions. And then we came up and it actually created support there, created a level of support right there. Pretty interesting. Where do we go from there? From this low, wow, we made this little high, right? And the reason why these highs and lows are so kind of close together is because XRP it took off. A lot of buyers came into the market, a lot of investors, a lot of whoever, I don't know, right? And people were buying XRP and it just continued up. It just went so bullish so quickly. So that's why this happened. So there's a couple of different things. This was a low. I mean, you could take a Fibonacci from wherever. I could take it from, technically, this low here to this high. And look at this. It retraced to the 50% right here. And then bounced right off of there twice. 2 4-hour candlesticks bounce off the 50% area twice. So if you're not buying XRP below $100.50, around $1.40, I feel like you're going to be missing out. I feel like we're not going to see below this area for a long time. However, if I drag the Fibonacci from this significant low to this high that was created, it also bounced off the 38%. In which case, it wouldn't be out of the ordinary. It wouldn't be super, super crazy for us to see 50 or 61.8%. We just don't know, right? We need to judge based off of what we see, based off of what we're identifying at that time. Whoops. I have no idea what that was or how that, whatever. Anyway. So that's that. I'm really curious now to take the Fibonacci from this low to this high, see where it retraced to. Wow, yeah, passed right through the 70% and went to the 78, went to the 78-ish percent area. So that's pretty interesting. Two things about that. Either who knows what's going to happen, but sometimes the deeper the pullback, the more bullish and the more up it's going to go. Right? Picture it like a slingshot. It's a slingshot right now. It pulled back so deeply on this Fibonacci retracement in this area that it slung right back up really, really quick. And I think we're going to see $2 soon. I think we're going to see $2 soon and so forth for XRP. We'll see. We'll see what happens. But we do have potential to come to here. We do have potential to come to the 61.8% zone that I identified in this area. Newfound support right here, right there. So with that being said, that's a whole lot of Fibonacci information. That's a whole lot of market structure. It's important to identify market structure if you're uptrending or if you're downtrending. If you're uptrending, you want to look for buys because the trend is your friend. Stick with the trend and, you know, until you're advanced and you really, really know what you're doing, et cetera, et cetera, et cetera. But even the pro traders, even the experts who really, really know what they're doing, they still stick with the trend because the trend is your friend. So market structure, the highs and lows, number 1. Number 2, identify Fibonacci retracements, the patterns, the extensions for your take profits, and manage your money and risk well. That's a whole nother topic and we take a whole nother video. So with that being said, we're going to end it right here. Stay blessed, everyone, and get back to, you know, whoever showed you this. Get back to myself if you'd like. Let's connect further. If you're still watching this right now, I'm just going to put this up, my Instagram really quick. while I'm recording this, you can give me a follow if you'd like, and we can connect further. I guess I could have just clicked on my name right there, but anyways, boom. So feel free to connect further. Look at that, I already got a follower. Again, so don't be afraid to connect further. Take care, everyone. Peace, 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 love, and happiness.